Hey, Carl, perfect setup for the interview we're about to do here with Susan Collins, the president of the Boston Fed. Thanks for having us. We are here in the gorgeous Boston Fed building here.
Well, thank you for being here at the Boston Fed for our 67th Economic Conference.
Wow, I think I've been to a bunch of them. I don't think about 67, maybe 20 of them. Let me start off with the most recent inflation report, which beat expectations and really caused the market to make this shift of thinking, well, maybe or maybe not the Fed's going to hike, to Fed looks really certain to cut. What was your reaction to the inflation report?
Yeah, so let me say three things about that. The first one is that some promising news there. We are seeing some moderation in inflation, and I can certainly talk more about some of the details, what we're seeing. We're also seeing some rebalancing in the economy more broadly. In terms of the inflation numbers, though, the headline came down, and partly for energy. But at the same time, data is so noisy right now, and the progress that we've seen has been pretty uneven. So just like I wouldn't overreact if things went in the direction that we weren't looking for, I don't overreact if we get some promising news. I think we're positioned to be patient, and the 3-month core is still at 3.4%, Steve. That's higher than we want, and so in order to get back down to 2% in a reasonable amount of time, we need to be patient and resolute, and I wouldn't take additional firming off the table. We need to look holistically at the data. So promising news, which is great, but I remain focused on really looking at the kind of full complement of information that we're getting and making assessments in real time about the right thing to do.
So just to recap, the market reads this number and says it's off the table. You read this number and you say it's not off the table, which is sort of saying, like, is the market making a mistake, or did it go too far in saying, oh, by March or May of next year, you're going to be cutting interest rates?
So I understand a tendency to really enjoy good news, and there is some good news in some of the numbers, and I think that we need to appreciate that. But I don't see additional firming off the table. I think a key point is we need to really stay the course, and we are seeing that the work that we've done is feeding through the economy. We're seeing some broader evidence of rebalancing, in particular in labor markets, and that's really important. And so there, again, I think it's important for us to be patient and recognize that far from declaring victory, there are parts of the inflation numbers. Good price inflation has come down substantially, reflecting improvement in supply conditions. That's actually back to pre-pandemic levels. We're seeing some good news on the shelter price inflation, but got to watch rents in particular, because that's been very uneven, and we need to make sure that the moderation there is sustained. And while we've seen a bit of good news on the non-shelter services, there's really more to do there. And so I'm being patient, looking holistically at the data, and welcome the promising signs.
You've used that word holistically a lot. I just want to ask you, though, about a month ago you talked about higher interest rates doing the work for the Fed. Those rates remain higher than they had been, say, in the summer, but they're lower than they were when you made that comment. Do you still see that interest rates are doing some of the work for the Fed?
Yeah, so it's certainly the case that, for example, longer-term treasuries has come down since the last FOMC. There's movement in there, and it's kind of hard to predict exactly where that will go going forward. I look overall at financial conditions, and we are seeing that credit conditions, there is some restriction there for firms that are bank sensitive, and a lot of the firms have very strong balance sheets, and so are less so, and also for households. And so I am seeing evidence of the kind of restrictiveness that's consistent with the orderly slowdown that we're looking for to realign demand with supply and continue the inflation moderation that we need to bring inflation back to 2%.